was, right there in first place for 1, 2, 3 weeks in a row, and then boom, out of there.
I mean, they could have just
Gone.
stopped. They could have just stopped at week, 1 or 2, week 2 or 3, and still won the competition. But
Yes, absolutely. And then of course, you see some consistency. You see 1057, I would say probably pretty consistent, at least from week 3 to week 4, popping up there and then holding on to second place from third place to second place. And then we have, of course, 1015 coming from second place and then holding on to the first place position after best 1063 pretty much took themselves out of the competition. Now, this says a lot about just traders in general, that consistency really is king. We used to say cash is king, but everything's going cashless these days. So I'm going to say consistency is king. And, any other observations from this week 1, 2, 3, and 4 totals?
I just can't wait to see who they are in person, right? It may have been traders that we know, it may be traders that but now it's just a big mystery to do the final analysis and confirmation on your end, and for us to see, put a name with a number.
Yeah, and actually,
can you go back to the
sure, absolutely
the second slide? I just want to see.
Yeah.
And then go forward again.
Okay.
Yeah, I mean, best 1015 has been pretty consistent, certainly the last 2 weeks of the competition. So certainly coming ahead, which to me suggests that this trader likes trading a more volatile market. Perhaps they didn't necessarily trust the significant upside that we saw the first 6 weeks of the year, and week 3 and 4 proved to be more volatile, and pulled ahead to win. So
I think you're onto something, Jill, and we're going to find out this when we actually have our first, second, and third place winner on the actual show. And they usually share their trading strategies, but what you're pointing out probably illustrates that this trader, who really raked it in week 3 and week 4, was probably trading to the short side, or just caught some poppers and droppers this week that they caught them in the right direction, be it long or short. But certainly this trader, captured the competition from week 3 to week 4. I mean, that's pretty evident. So, I mean, what I can see is in terms of a clear line, and I'm just going to bring up my laser pointer here, is you can see here's best 1015 going in from second place to first place. And then here we have best 1057 going from third place to second place. Really, I mean, 1015 was 43,092. They just luckily held on to the first place, meaning that they actually have a lower weekly total in week 3 than they do in week 4. But fortunately, best 1057 wasn't able to catch up. They were just about 2,000 shy to finish the competition in second place.
And Mike, what's so interesting is 1015 and 1057 weren't even in the top 3 in week 1 and 2. So again, I think it further highlights that perhaps more volatile markets are not better for them to trade, but they feel more comfortable, using the volatility in the market to trade.
Trade on the short side, possibly on the short side, because I mean, we've literally had our first set of volatility starting last week, and then coming into this week, the volatility really spiked to the upside Mike, in these last 2 weeks.
Real quick, Mike, one of my biggest observations, from the previous slide, was out of 100 traders, give or take, was I right that only 8 people finished positive?
Well, I think that's a good opportunity for you to mention some of the risks and the risks of trading. And I will say that this was a rather strange competition, in that pretty much consistently week 1, week 2, week 3, we always saw 10 people green. Now, I guess traders started to take much bigger risks going into the
risk
week.
It all, I guess, to win, right? Yeah.
I think they were doing a little bit of YOLO trading. You only live once in the traders competition, because in the last week we saw, from it all being green, 1 to 10, we now see the 8, 9, and 10 position having gone red. Now, we also see this in real life, Chad, right, with traders taking inordinate risk at certain times. So it does illustrate the statistics of trading, that very few traders, maybe only 10, 20% of traders are truly profitable, and consistency and treating this like a business is extremely important. So I'm really glad you illustrated that. You want to add something to that?
I think from an observation point, I think I will give the retail trader a lot more credit than that. And you're exactly right. This is a pure YOLO play, and that they're risking it all to win the competition. Why not, right?
Yeah.
I don't think someone with a $30,000 account is risking it all ever like they would here. Surely, I mean, they wouldn't exist for long as a trader, but to the credit of most traders, they probably have a game plan, a risk parameter that would never let this happen. We hope.
We hope. We
I
hope.
mean, and it
Go ahead.
happens both ways, but surely, we don't give any advice or give any recommendations or guidance per se any direction. But traders are better than that. I mean, there's no way that only 8 people would be positive in the real world if they weren't just swinging for the fences to win the competition.
Yes, absolutely. And this is, again, this is with a $50,000, base. This is all based on results, as if this was a hypothetical $50,000 account. So to make $35,000 on a hypothetical $50,000 account, even if you were down, just doing the math really quick here, it would have been down about maybe $17,000 going into today. So from 50,000, they would have been down 17.
Oh, yes.
Well,
Okay.
Yep. So basically that $35,000 gain would have been on basically about a $35,000 account, which would have been an absolutely astronomical move. And that definitely is YOLO trading. Now let's jump and take a look at some of the stocks that they were trading. So you could see the name. So this is TMBR, which is a $2.60 stock. So you can see that the stocks that they're trading are stocks that are very, very low priced. These are stocks that are moving incredibly fast. Just these are the most risky and high activity stocks in the market. The next one was BAERAWIN and CING, also OCEA. All of these stocks are basically sub $10. So every one of the top 5 stocks was sub $10 today, in today's trading. So this was something that we've seen quite a bit. Now you do see some of the old standby stocks like Oxy, OXY. We also see AMD, which is almost always on here, right, Jill? I mean, I think we've seen AMD on here more than any other stock in the competition since the beginning of the competition.
Which is so funny because Micron is always the other one, MU, and it's the first time since I've been covering this with you that it's not on there. AMD, Micron, just because they trade so much volume of the NASDAQ 100, they're on there for the virtue of that. But this is the first time I haven't seen Micron on there.
Yeah, so that's a notable exception, is that we don't have Micron in our most actively traded, but we do have one of our meme stocks, the BBBY. And we have Meta, Facebook, and we also have Amazon on there, which a real high price stock. For it to be up there, that's kind of unusual, but we have seen Amazon quite a bit in this competition, staying in the most actively traded. But the Roku is also on there. It's one that we've seen quite a few times in the past, and obviously Oxy is another one that we've seen lately, but certainly has seen in the past as well. So we have a kind of list of usual stocks. I'm going to take a look at some of these charts in just a few seconds, but I just want to do a big congratulations to all of our winners, from everybody here at DAS, Cobra Trading, and Benzinga. We'd like to congratulate our winner and thank all of our competitors and sponsors. Of course, thank you so much, Cobra, for sponsoring this competition. And of course, thank you to Benzinga as well. Be sure to follow us on social media for #1 Best Trader competitions for future competitions. Cobra is going to be sponsoring another competition in the near future. And stay up to date on all of our competitions by following us at One Best Trader on Twitter, Facebook, Instagram, etc. Now let's jump right into the news. According to a recently released research report, as of today, I believe it was received, the Federal Reserve is unlikely to bring down inflation without having to raise interest rates considerably higher possibly causing a recession, which certainly had a volatile effect in the markets today. So, what are your thoughts on that, Jill?
Yeah, it's a very counterintuitive quote that you had pulled from that. We saw what happened with the data that came out this morning, which certainly led to the sell-off this afternoon, where the inflation data is still continuing to come in hot, right? So for that research to say the Fed is unlikely to bring down inflation without having to raise interest rates, I mean, it's obvious, and the Fed hasn't changed its message. It is continuing to telegraph. Mike, what you and I have been talking about, I don't know, for what, 12 months at this point?
We started
So
saying the specter of inflation before, while everybody was still saying that inflation was probably going to be transitory. You and I were on
Right.
top of this right from the very beginning.
Well, especially wages. Wages are not transitory, right? You're not going to revert someone's
Yeah.
hourly rate. But I mean, it just, according to recently released research, I don't know. This seems kind of obvious to me. And they have not changed their messaging. They have, very clear pieces of data that they want to get in line. And what's so interesting is what we've seen over the past 6 weeks, especially, let's call it 7 weeks, the bond market and the equity market are saying two very different things. And
Yeah.
it seems as if the bond market is kind of paying attention to the Fed, and the equity market wants what it wants and is kind of trading on hopium. But I don't know. I haven't seen anything different in the
I don't
Fed's
know.
exposure.
In my 24 years of experience, the bond guys usually get it right. I mean, that's usually you follow the bond guys rather than the equity markets and some of the equity pundits. But needless to say, Chad, what are your thoughts on interest rates and inflation? I mean, you're deep down there in Texas, so tell us the thoughts from just outside of Dallas.
I mean, Texas, the housing market is still screaming despite the crazy mortgage rates, but it's bound to catch up with everyone. There's no question. So I feel for those people that are trying to buy a house. But as far as the market goes, the market never makes sense. I too have been in the industry 30 years, and the market does what it wants to do. I mean, unless there's dire news, the market just kind of trudges along, not making sense most of the time. That's why trading is so hard. So yeah, I mean, you're right. It was so obvious that this was coming to a head when we were printing money like there was no tomorrow.
Yeah.
And it's going to take a while for us to dig out of it. There's no question. I think when you double the monetary supply and then your supply is surprised that inflation went up, it's kind of a fool's take on it. But
yeah,
it is.
Yeah, I think we're sitting at around 31 trillion in debt, national debt, and about 5 trillion of it came into existence in the last 3 years. So that's a pretty big increase in monetary supply. And the usual rule of thumb that Jill and I have mentioned many times on this show is that if inflation is at 5%, then the interest rates have to be at 7%. This is kind of what what you're taught in economics principle, in order to get inflation down. I think the Fed has been consistent in its messaging. I think at some points the market has interpreted that consistent messaging and kind of saw a possible pivot that really didn't. It was almost like Jill said, hopium. They hoped for a pivot that was probably unlikely to come. And I think that now it's just that report was the back to reality report. Unfortunately, sometimes the markets need a little dose of reality. Sorry.
Oh no, a robot layoff.
Yep, I think that was what do you I think that was Chat GPT coming in there, and that was Chat Jill. So basically, the cost cutting at Google and Alphabet, they are even laying off 200 robots that worked in Google's headquarters, mainly in the cafeteria. And I just brought this up kind of just for humor. But there was
what does that firing look like?
I don't even know. I think they just shut them off.
Right? You're just pulling out the plug, right? It's really easy.
I don't know, but I mean, they laid off 8,500 real humans.
I care about those. The robot doesn't seem too hard to lay off. You just unplug it, right?
Yeah, but I mean the idea here is cost cutting, right? And I mean, if you lay off if you lay off 8,500 people, then you don't need 200 robots in the cafeteria. I mean, that seems to be the case, right?
Right.
So what are your thoughts about layoffs, employment, the situation in terms of the employment? Because I mean, supposedly the market is red hot. The job market is red hot, but now we're starting to see some layoffs.
Right. But Mike, I think with tech positions, and you have to think of it this way, there is no one in the C-suite that has ever managed a company through a pandemic. So there really is no precedent to the way companies are run today. So they overhired to keep up with demand that was existing at that point, and no one knew what it would look like post-pandemic. No one's ever lived through one in the C-suite, right? So they are um, right sizing their labor force for
Hmm.
existing business conditions in terms of supply and demand. Fortunately, these types of positions, they will most likely get absorbed in either another sector or another company. These types of positions are so in demand, especially cybersecurity. We have 600,000 open positions in cybersecurity that can't be filled. Now, I'm sure this is probably more product development engineer, maybe not necessarily on the cybersecurity end, but these are positions that will be absorbed. I think if it were to be, if you heard, the Home Depots or the service sectors laying off people that perhaps, can't wait a couple of months to get the next paycheck, or they're not as easily absorbable in another part of the economy, then I think that would be more of a concern. And anyone losing their job, what's the old saying? Your neighbor loses their job, it's a recession. You lose your job, it's depression, right? So I'm
Yeah.
not trying to be flippant when it comes to the types of jobs that are being lost and potentially gained elsewhere. But I think that's an important distinction to make. And it's not, besides the fact that nobody wants to do a layoff from a human perspective, the cost of onboarding a new associate is incredibly expensive. So they're going to get double dinged on it once they have to rewrite size their workforce again.
Yeah, absolutely. And just the other thing I wanted to mention, there was also the 8,500 people that were laid off in Sweden. On Ericsson was the other big layoff that was mentioned today. Your thoughts on layoffs, the job market? I know that Texas is a little bit of an anomalous situation. I think the job market's still very tight in Texas. Chad, what are your thoughts on the job market and the economy and the current state of employment in the U.S. and specifically to you in Texas?
There's so many factors, and I'm definitely not an expert on the subject. The sad part is, and I didn't look at these two stocks, but the second they announce a layoff, the stock price goes up. So talking about the senior execs, that's an easy decision for them. They lay off 8,000 workers, their stock jumps 5%, and that's more money in their pocket. So, it should be a harder choice. But I think with the pandemic and so many people working at home and some would argue better production, worse production, who knows? But yeah, it's all uncharted territory, like Jill said. So no one really knows how to manage this. And I think it's easy from the senior executive committees to just lay off the workers. And as hard as it might be to rehire, laying them off solves the immediate problem. Look at Twitter. They laid off 3/4 of their people, and I mean the stock's not doing well now, but that's what you have to do.
Yeah, I mean, sometimes the market is, it certainly responds different than you would expect, but the market just looks at it as a cost cutting situation, and they cut costs and obviously increases shareholder value, et cetera. I mean, I think that the one strange anomaly that I think we've mentioned it in the past, you and I, Joe, is that we have this strange situation where we have like something like 7 million people that are able-bodied that are just choosing not to actually look for a job, whether they're trying to be influencers or I guess that's more of a work ethic kind of issue, which might be creating this perception that we have maybe they're trying to be day traders. I don't know.
I mean, it was funny when Chad had said, where do these 8,500 workers go? Sometimes people try and always dabble, their toes in day trading. That's what happened during the pandemic, right? So
I've watched it 2 times in the past during
right.
the tech bubble implosion. A lot of people became day traders, and then again in the financial crisis, a lot of people became day traders. So I've seen this happen 2 times in the past.
Right,
So,
but
so
I mean,
Chad, you might be getting some new accounts.
and most recently we saw during the pandemic with people getting, stimmy checks and either working from home or had no choice but to be home. Where did everyone go? Right into trading. That's how we had the meme stock phenomenon. That's why we saw, the increase in digital asset trading and so forth. But I also think, and I do agree with you to some point that there is the challenge of a work ethic. I also get the sense that there is a much more entrepreneurial spirit than there ever has been before, particularly with women and minorities, because now that we understand how to work in a hybrid environment, and those are the people that that get hurt the most when you lose jobs. But now that we know how to work in a hybrid environment, the entrepreneurial spirit is pretty intense right now. It's certainly from what I'm covering.
Yep.
We're VC, we're VC and private equity are putting their money into women and minority owned businesses and so forth. I think the entrepreneurial spirit is there. But yes, to your point, I do think there is a work ethic issue as well.
Yep. And I do think also that a lot of it is, I mean, self-employed. Many more people are independent, self-employed. Certainly I've been that for many, many years. And most people who are in the financial industry as independent brokers are all self-employed employees or, self-employed professionals. So there has been a big movement towards self-employment and entrepreneurial spirit. So I do think you hit the nail on the head there. Last item of the news before we go and take a look at some of these charts. And I'm going to invite you guys to stay with us this time to look at some of the charts as we spoke about some individual stocks. But the last item of news is that it's been 1 year since the start of the war in Ukraine. And I just wanted to get your thoughts. Pretty much Russia's getting ready to start a new offensive. NATO and certainly Joe Biden was just in the Ukraine, saying that they are going to continue to support, Ukraine. It's just sort of become somewhat of a proxy war or testing armaments war. I know that Poland just delivered some tanks today. But thoughts on the war in Ukraine 1 year after, and what the effects are on the market, and what we might, expect from your opinions. I mean, we know it's opinions going forward.
Well, it's interesting, Mike. Not only are we geographically far removed, but sometimes you have to remove the emotion out of this. We saw Hurricane Katrina when 9/11 happened. As traders, you have to figure out what are the derivative plays of what's happening through these crises. And of course, our first thought is the humanitarian one, and the strength of the Ukrainian people is just, I'm getting the chills talking about it. It is quite remarkable. I can't even imagine living through something like that. But as traders, you have to think about where the opportunities lie, right? When 9/11 happened, you were trading, airline stocks. When the financial crisis happened, you were trading the banks and the home builders, right?
Yeah.
So, the first inclination was with Ukraine, what's going to happen in the commodity space? What's going to happen with nat gas? Certainly Europe, they stockpiled earlier, and it has been a relatively mild winter. So certainly some higher being was on their side with that. And nat gas prices have stayed relatively muted. But those are the different areas that you look to when it comes to Russia and Ukraine. I think other things that we need to pay attention to now is China and Ukraine. I'm curious to see how that plays out. But again, I think this is largely going to be a commodity play more than any other space until there's some sort of a resolution here.
Yeah, I totally agree. You have any thoughts on this war in Ukraine going 1 year anniversary, Chad, from your perspective?
It's so far removed. I think Jill made a good point. It's so far removed, it's hard for us to even wrap our heads around. From an economic standpoint, a worldwide perspective, if China and Taiwan tangle, that's going to tear down the whole world economic system. I mean, then you're talking two economic superpowers going at it. Not that Russia isn't, but Ukraine, one would argue, probably doesn't have a whole lot of economic impact other than natural resources and so forth. But yeah, if you get China involved, then
semiconductors are that. I mean, that's pretty much Taiwan is, I think, the world's largest producer of semiconductors, or at least high quality semiconductors. So, I mean, that would be. Then, of course, China is a massive producer of products. As we all know, most of the things that we buy in stores today are produced in China, and certainly that would entangle the United States. I mean, that would be the one that really would, like you said, bring down the world market. And the scary thing about it is you have a similar kind of all-powerful authoritarian leader in China that's kind of detached from reality, somewhat like Putin. That's the big fear, obviously, is if something like that were to spread. So certainly that is, as far as my own thoughts and feelings, having so many Ukrainian friends and knowing how many people have been displaced from Ukraine, I think that my heart goes out to the Ukrainian people and all the people who've been displaced by this horrible war. And unfortunately, I think that whoever wins the war in Ukraine, I think the Ukrainian people are the big losers, because their country is being absolutely obliterated. And of course, we know that besides for the economic, implication of all the interruption of trade, et cetera, I mean, Ukraine was a huge breadbasket of the world, and I think we're all paying for it in one way, shape, or form when we go to the supermarket. So anyhow, my heart goes out to all the people in the Ukraine 1 year after the war has started, and obviously, I hope and pray for a quick end. Now I'm going to jump to the charts, and we're going to take a look at some of the charts that we've mentioned today. So I'm just going to bring up my share my screen, and I'm going to invite you guys to stay with me today as I go through the charts on my Dash Trader. And I'm just going to bring this up here. Okay, so I hope that you can all see let's see if I can get this over here. There you go. If you guys can all see my Dash Trader here, and the one that I was going to just bring up real fast is this is the daily chart of the market, and this is the SPY, and we had a pretty big move down in the last week. We had a crossing over of the moving averages, and certainly the market had showed some topping pattern for a little while. So that was kind of 1 week ago, 2 weeks ago. So as it plays into the competition, as Jill appropriately pointed out, anyone who was primarily the bulls were doing great the first 2 weeks, and then there are the bears coming in the last 2 weeks and kind of sneaking the victory from the bulls. So I think that this time the bullishness and bearishness played heavily in the competition. So anybody who was more of a volatility player and played a little bit more to the short side, they benefited because that's where the competition ended. Any thoughts on the market chart, Jill or Chad, before I move on to the next one?
I mean, quickly in relation to the competition, yeah, the people that started the competition with the YOLO longs, you just bought it and hoped for the best. Clearly, they could have rode that up, and that could explain why they just dropped off the leaderboard with this downturn in the past week. But
I would certainly say that as well. So let's just take a look real quick. One of the stocks that we saw on there was, I'm just going to do it again, Facebook. I'm going to drag this out a little bit. See something here. So Facebook certainly, actually, let's just do Google real quick. Okay, here's Google. I mean, Google, we talked about Google with the layoffs. Certainly, the stock did not really respond too positively with the layoffs, but obviously, Google has been smoked in the last 2 weeks. That stock has really taken it on the chin in the last 2 weeks. So certainly, Google, not a great example of that. Let's take a look at AMD. AMD, similarly, kind of pulling back. This is one of our most actively traded stocks in the in the competition overall. Certainly just reflecting exactly what we saw in the market. I'm just going to bring up real quick, if we can bring to this market analysis. Let me just bring this up real quick. Let's just do, let's see. We had AMD, we had BBBY. Obviously, BBBY had some massive days, but has pretty much sunk back down into the nether regions down at $1.52. So certainly that's the example.
That's a bankruptcy play, is it not?
What is that?
I said, believe that's a bankruptcy.
It is.
Play, is it? Yeah.
It is.
Yeah, and that's the kind of that bankruptcy squeeze that we've seen a couple of times. I mean, this one kept popping up, popping up on the leaderboard, and then we have AMC, which was another one of the meme stocks. I mean, this one's only $6, but certainly you could see the pops and drops, which I guess traders like to trade that range, between the winners and the losers.
Well,
But
the craziness of the day, Mike, was the lunar LUNR. That was
LUNR.
yeah, that was the craziness of the day. You want to see?
Well, yeah, I mean, I think you hit the nail on the head with craziness. I mean, we certainly saw that on there on the top 10 list. But I mean, this stock, was at one point $35, wasn't it?
Well, it was $10 and it went up to 130. So.
Mike, you know what I thought was interesting? That Bear was on the list. Julius Baer, BAIR. I mean, I know what it is. I used to cover the company when I was on the trading side, but it's an ADR. I was so surprised to see that.
What is it? BEAR?
Julius Baer.
Look, what's the symbol?
BAER.
BAER. There it is. Bang.
Yeah, which, like, I don't think I've ever seen an ADR on any of these competitions. So I'm wondering.
Well, I think that's because it just popped up. I mean, it popped up from $4. I mean, this is that popper and dropper.
Yeah. Okay.
When they pop up, I mean, this thing popped from $4.50. It opened at $10.25, ran all the way up to $12.25, then drifted back down to $7. I mean, I would probably say that this is the stock or one of the stocks that may have made or lost the competition for an individual.
Oh, you know why? Because there was a filing today.
There you go.
Investors acquired a 22% stake. Because I was gonna say I've never seen an ADR on these, but okay, I guess that's why your scanners work, right?
Yeah, and Jill, speaking, I guess on behalf of the traders, they probably had no idea it was an ADR. All they saw that it was up 100% for the day and they were going to short it. Yeah,
so. And honestly, Chad, I don't know half these companies that end up in the competition, but from a trading perspective, volume, price, your scans, that's what you care about. So, I mean, there's a lot to be said about this.
So look, I mean, this is the one that Chad mentioned, which was LUNR. I mean, this stock pretty much 3 days ago was at $35, shot all the way up to $135 in one day. Reversed, did an about face, closed at $85, then dropped from 95 at the high, which is where it opened, faded all the way down to $20, and then pretty much ran between $23 and $35 today. So I mean, this is the insanity of that would make a $35,000 gain for an individual trader. Because remember, the competition rules allow for 2,500 shares. So if you catch this in the right direction, it's only, was at least a week ago in the $10 and $20 range. You catch this for a daily move. If you can get it shorted, and if it's shortable on one of the short lists that we check to see if it's easy to borrow or not, I mean, this could make or break a competition for an individual trader. So there's certainly incredible movement and volatility in this competition. And I think that we see that in general. I mean, when you look at the QQQ, I mean, if you look at yesterday's activity, there was a gap up from 297, traded all the way down to 292, and then ended the day, in and around 297.75 with a double top. I mean, this is a complete V-shaped pattern in the middle, and that pretty much got wiped out when the market opened up this morning. So, I mean, the volatility in this market is just absolutely phenomenal.
It is. You know what, Mike? We actually probably have to check in the beginning of the presentation. BAER is an aerospace company, and I wonder if.
Yep. Let me go check that.
I think the name said Julius Baer, but the ticker symbol was for the aerospace company, which is funny because I'm glad I made this stupid mistake. But a lot of times stocks that you think are one ticker or the other will trade for that reason. Like I remember Intel, the INTL or INTC, and if there was news, one or the other would move for that reason. But it says Julius Baer, but that BAER is actually an aerospace company. But so whatever, maybe someone thought that was it, but.
Well, the best example there is there's a Ford Motors, which is F, and then there's FORD, which is a forward designs.
Well, so you know what? No one cares if it's Julius Baer or not, but they made money. So all right, let's.
Yeah, I mean, two other stocks that we should take a look at is AWIN, right? So let's take a look at AWIN. Right. I mean, this is a stock that was just kind of trading in a range, but I mean, very, very, moving from a percentage standpoint, pretty active. I wouldn't say that this was the other one was TMBR. TMBR. So TMBR, I mean, look at this one, $2 gapped up from $1.95, goes to 230 today. I would say that this is probably the one that made that guy 35,000, or that person 35,000. They went from 230 to $3.20. Then from 320 back down to 268. I mean, but not only that, if you go and we put it on like a 5-minute chart, the pattern of this is pretty tradable. I mean, this is a very tradable pattern. Just going up and down, buy setup after buy setup, etc. And then finally we got CING and OCEA. OCEA, we got, I mean, again, this was that one that just went up from $8 all the way up to $24. I mean, just incredible moves here on all of these popper and droppers. But enough about that, guys. I want to thank you all for being here. I'm going to bring back to the presentation. Hold on one second. Let me bring my dash back up. But I'm just going to go and stop sharing. So, guys, I just wanted to wrap it up and just thank you so much, Chad and Cobra Trading, for sponsoring our #1 Best Trader competition. And as always, Jill, I wanted to thank you so much for being with me here and doing the commentating on the competitors and everybody who's in the competition. It's going to be very exciting to have our winners on in our winners circle in the next couple of weeks. And thank you so much and have a wonderful weekend, everybody.
All right.
Take care, everyone. Thank you.
All right. Bye-bye, guys. I'm just going to do my standard announcements, and let's just wrap it up once and for all. So standard announcements, stay up to date with all things DAS, and sign up for our monthly newsletter and email. Simply fill out the form at the bottom of our webpage, www.dastrader.com. Subscribe to our YouTube channel, DAS Trader TV, and the DAS Newsroom. Of course, stay up to date on all of our social media outlets at LinkedIn, Twitter, Facebook, and of course, Instagram. Thank you everybody very much. Can't wait to see you in the upcoming newsrooms. And again, congratulations to all of our winners.